What's up guys, my name is Ilya and welcome to my channel. So today I want to discuss with you my investing portfolio on Robinhood, because Robinhood app is pretty much the main app that I use for investing. Just want to let you know it's not an investing advice. I'm just showing you what I have, what stocks did I buy, and what stocks I have right now at this moment. And also I will show you and I will tell you my story about the whole coronavirus situation, how much I lost, how much I made, and overall what I think about stock market. And also in the end of the video we'll talk about, should you sell your stocks in 2020 or should you actually keep them for long term? Let's go. But before we start, hit that like button, comment down below, and subscribe so my channel grows and I make even more good, or maybe not that good, videos. Alright, so here's my Robinhood app. As you can see today, which is, well, actually today is Saturday, so it means on this Friday I made $826, or I'm up 8%. It's pretty good. On the weekly basis, I'm up 27.9%, or $2,300. That's amazing, right? In 1 month, I'm up 49.72%, which is 50%. And you get like, yo, this guy making money. Well, here's the thing. Let me show you on a 3-month term. Boom, I'm down 20%. Well, as we all know, this is where whole corona crisis happened. March 20th, boom, went down. Well, but again, in 1 year, it's only 10%, because I did buy a pretty good stocks like Apple on a really low price, and it was growing for years. And even then coronavirus happened, it did go down, but I didn't lose that amount of money that a lot of people actually did. I did lose some, but it didn't go down till the bottom, or didn't go down even till the price that I actually bought it for years ago. Well, as you can see, I also trade options, and we will talk about options in a different video. I'm planning on making how to trade options, what options actually are, why trading options is actually better, or why is it bad. So video about trading options is going to be on my channel in a couple days, so subscribe so you don't miss that video, and I will tell you how to trade options and if you actually can make money by trading options. I think yes. So let's talk about this 20% that I lost. To be honest, that I didn't lose them because I'm trading options and I did do good trades, option trades, that I made money, and it was definitely over the $3,000 that you can see here that I technically lost. Okay, so let's discuss my options. As you can see, I own 1,000 shares of WTRH, or Waiter Holdings. Right now they're at 2.8. I bought them for average cost is 1.98. And probably a lot of you will say like, yo, this is penny stock, don't buy penny stocks. Well, here's the thing. I bought this penny stock because I thought about delivery services. Like, legit, corona is here, people can't go outside, but they still want to eat, they still want to, buy stuff. And when you can't go outside, you just call someone like GrabHub, Uber Eats, and Waiter Holding is a pretty good delivery company, and they've been great. Look, in 1 week, mirrors for 11%, it's nothing, right? In 1 month, 120%. In 3 months, 700%. Usually penny stocks, they don't grow that much, or they grow and go down right away. This is what actually happened with WTRH. As you can see, the stock in March was trading for 35 cents, and then on March 19th it went up to 260, and then it went down. Well, here's the thing. This stock is actually, we can call it a Corona stock, but I don't think that the price will go down because after earnings, they did really well. They cut their expenses. I think daily average delivery amount was like 30,000 orders per day in the end of March, and in April it already was 45,000 per day. That's crazy, and they're really good. Check them out. I do really think that this is the penny stock, but it can go up and hold their price. And somebody said, well, this is a Corona stock, it will go down after Corona is done. In my opinion, Corona won't be done. Corona is here and it won't disappear. And guess what? Why would it be a Corona stock? Technically, it's a delivery service and it's been delivering food for a while and it doesn't matter. And look at Blue Apron. Blue Apron losing money, but during Corona they spiked to $30, but also they went down to like $8 per share. That's crazy. Can you imagine to buying Blue Apron stock for $25 and then it went down to $9? It's like, oh my god. It's like Corona here and you're losing like more than 60%. But I will show you stock that I lost a lot of money in. Well, I kind of made it. I didn't make money from other stocks, so technically I don't feel it, but we'll talk in the end of this video about losing money on stocks. Alright, as you can see right now, I'm up 41% here in total return, and it's pretty good. I'm holding it. I think the projected price for this stock is $5, and I'm definitely holding it. I do believe in this stock. Well, if you're gonna lose money, that's alright. Well, here's the thing. The stock market, when I invest money, I do invest money in a really good stock with really great value, but sometimes you want to invest money for a really good return. I can't call my portfolio aggressive portfolio, but it's definitely not conservative, and it's more on an aggressive side. So I kind of like mixing up. I have stocks like blue chip, like Apple, so technically it won't go down in price, and it's one of the biggest. At some point, it was the most expensive company in the world, so I'm kind of safe on this side. Well, let's talk about it later. All right, so the next stock here is DraftKings. Oh yeah, DraftKings went public in end of April. I did, unfortunately, as you can see, in 1 week it went up for 21%, in 1 month in 77%, and in 3 months it's 63%. That's crazy, isn't it? Alright, so I own 100 shares. The average cost is 000. Well, here's the thing. The DraftKings, they did an IPO through acquisition. So I bought shares in DEAC. There was a SPAC company. And when when Robinhood transferred my stocks to a new ticker, to actually DraftKings ticker, for some reason the average cost is $0. It's kind of uncomfortable, because you have to calculate how much money you made. But technically I bought, I think the average cost would be like 17.6 or 17.4, around that, and right now it's at 28.65. So I made good over $10, and that's pretty amazing. I do believe in this stock. After earnings, they said that the stock didn't feel the coronavirus, so technically the coronavirus didn't the DraftKings didn't feel the impact of coronavirus, which is really good for the stock. And I do think that you probably know DraftKings as a fantasy football app, but guess what? They have sportsbook, and they also have online casino in a lot of states, and that is great. Well, first of all, I feel that online casino, it's a future. Yes, people still like to talk, blah blah blah, but online casino, it's really great. And look at Great Britain. In Great Britain, online casino and sports book takes the biggest chunk of the betting market. And I think in 5 years, DraftKings will be a top one company on the market in the United States, and stock will go even higher. It is really good stock. I love it. All right, so next stock is Apple. Yep, in 1 week, Apple went down. In 1 month, Apple is up for 6%. In 3 months, it's down too. But guess what? In 1 year, it's up 64%. And that is pretty amazing. I own 9.02. Yeah, I mean, my DRIP option from Robinhood automatic dividend reinvesting was on, so it reinvested my dividends. As you can see, I own 9 shares and average cost is 190.45. I bought this stock, I don't remember, probably like 3 years ago, and total return is 61%, and I think it's great. Apple right now trading really high. It's pretty much on 52 weeks high, and I'm kind of sketched out about it because who knows what's gonna happen in September, October, or November. I don't really think that the sales will be that great, but at the same time, with Verizon AT&T upgrades, probably if you're paying right now $45 for your old iPhone, it's not gonna be a big problem to just switch for a new iPhone. So I do think that Apple will do pretty good. And as we all know, the App Store, it's a really huge part of the Apple's business, and it makes a lot of money. So Apple will be good. We all know that. All right, next I got Twitter stock. I bought 5 shares. The average price is 20.95, and total return is 40%. It's not bad, right? Even during Corona. In 1 week, the stock is down. In 1 month, the stock is up. And in 3 months, it's down for 21. At some point, Twitter was trading at like $43, and I was like so happy about it. But we all know that Twitter, $43, it's kind of like weird. Well, the next company is YEXT. I'm not sure. I like this company. I own 4 shares. The average cost is 15.67. So technically I'm down 13%, but it is down because it got hit by coronavirus. So this company, their business is to advertise and make businesses present in online. Does it make sense? Well, kind of. So when you Google a business, every single search engine and online platforms know about that business. That's what YEXT do. It's really like artificial intelligence company, and I do think on the long term that they will go up. To be honest, I think last month, no, in 3 months. Look, during Corona, it went down to $8. I was thinking to buy some, but I had a bunch of options going on, so I didn't have money to buy it. Well, that is cool, I guess. PayPal. Oh yeah, this is the stock that I liked it, and I still like it, but I didn't think that it will make me so much money during Corona. But I own only 2 shares, unfortunately. I bought it at the average cost of $74.83, and in total returns you can see it's 93.9%. That's crazy. And guess what? Look, for 1 week, in 1 month, it gained 40, almost 32%. That's crazy, right? That is crazy. It is a good company, as we all know right now when online shopping is booming, and they're probably doing pretty good. I think they announced on May 1st, it was like the biggest transaction day in their history. So I do believe in PayPal on long term, and I do think that this is a really good company with great value. So if you guys want to, but I'm not sure about $145. I do think that it's a little bit too high for PayPal, but who knows? Maybe it's just regular price for PayPal now. Well, we'll see. The next stock is AT&T. So right now AT&T is 28.28 and I own 6 shares. The average cost is 32.96, and as you can see, total return is minus 15%. AT&T got hit a little bit by Corona, and I bought it, I think, a year ago when I heard about AT&T deal with another company. They were purchasing another company, and I think court said they agreed that yeah, AT&T can buy a company, and I thought it's a great play, and it did go up. But guess what? Corona happened, so it went down. But it's still a great company. It's a blue chip company. As you can see, in 3 months it lost 25%, but it didn't go down that much, and it's one of the biggest carriers in the United States. So I do believe in this company, and it pays good dividends. So as a dividend stock, I recommend AT&T. So next, I own T-Mobile. So I bought Sprint stocks about a year ago. For average cost, I think was like $7. And as we all know, T-Mobile bought Sprint. So my Sprint stocks got transferred to T-Mobile stocks. It says the total return is 0%, but it's not true. I think I bought, I don't remember to be honest, but I think I spent $400 for Sprint stocks, and now as you can see, the 6 shares of AT&T worth $584. So I'm good to $100 up on this stock too. It's pretty good. T-Mobile actually right now during the 5G race, T-Mobile has the biggest cellular coverage, I think, in the United States, and they're really good position on the market. So I do believe in great future for this company and for the stock itself. All right, then now I have FITBIT. So FITBIT, I just bought it because it was cheap. I had extra money, and I just keep it. Well, because I do think that FITBIT is a pretty good company, but it's very hard to compete with Apple, hard to compete with Samsung Gear and other watches. But I hope that the stock will go up. Actually, I heard something that Google said they want to purchase FITBIT, and if they will do so, I think the stock will go up. Right now I'm down 11%, but I don't really worry about it because I have only 41 shares in it, and average cost, as you can see, it's $7.35, so it's not that bad. All right, now we're gonna talk about my biggest losers. All right, so here's the top ships. So Top Ships, it's a company that own huge vessel and oil vessel. I bought this stock because we all know the oil crisis. It was a war between Russia and Saudi Arabia. Then in May, oil futures went negative and blah, blah, blah. When I bought it, about 2,000 shares. As you can see right now, I have only 1,000 share, and it went up at some point, like here. Boom. No, not here. So it went up till 160, I think. Yep, right here, the spike, 1.53. I sold my 1,000 shares and I kept another 1,000 because I thought maybe it'll go up, but it didn't. It's a very sketchy company. I don't recommend it. You want to see something cool? Look, because we had so many reverse splits. Right now, the stock, you can see the stock price is $75,000. That's crazy. Top Ships is a sketchy company. Right now, the stock went down, lost like 25% because they announced that they're gonna put more shares on the market for like 13 cents. But I do believe that oil crisis is still here, and the worst time is yet to come. So it might go up because if you don't have place to store oil, you hire these companies to store your oil in vessels. As you can see, maybe you saw the picture in California coast. It was like tens of huge tankers with oil. So it might go up. I won't sell it because it doesn't go down a lot, and it's not like I have a lot of money in it, and it actually went down 62%. Well, it didn't because I sold 1,000, so I'm probably broke even right here, but still, just skip it. I don't have to spend more money on it, so that's totally fine. All right, TVIX. TVIX. We know VIX, TVIX. I just have it here, and I think it will go up. Nothing to say about it. During the Corona crisis in March, it went up to 1,000. I bought it, I sold it, and at some point I made a lot of money of it, but at some point it went down and didn't go up because feds were giving a lot of money to the stock market. Okay, like what the actual. Right. Because feds put a lot of money in the stock market and the economy in general. It's a huge IV, and they control the market right now. But I do think that everything will be much worse in the end of 2020. So I keep it, and it will definitely go up, and I'll take my money back. As you can see, it's only 2 shares. Average cost is $3.81, and it's not a big deal. I'm just keeping it. So now SPXS. So it's a daily S&P 500 bear leverage ETF. Let me give you one advice: do not buy ETFs. This is like such a, I don't know. I don't like ETFs. You can lose your money so quick. The problem with ETFs, the biggest problem with ETF is that if it'll go down 10%, then you have to make like 12%. It has to go up 12% so you can actually make your money back. And right now, when federal government and all countries in the world are feeding the stock market with money, it's very unpredictable. I have 100 shares. I bought it on average 23.47, and as you can see, I'm down 55%. But I do believe that end of 2020 will be crazy, and the worst bear market will be here. So I'm keeping it. I'm roughly half down on this, and I don't want to sell. When you sell, you lose right away. When you keep it, you at least you hope that it will go up. So we'll see. I don't think it's that bad yet. Okay, so, and the worst, that's JDST. We probably all heard about JNUG. So JNUG is a bull one, and JDST is a bear one. It's ETF, 2 times leverage, and I lost 89% on it. And I have no idea what to do with this. I have no idea what to do with this, and they did a reverse split, which means the average cost went up. I bought it, I think, for $20, and it went up. So I understand that here I lost money. Only one way how you can actually maybe get my money back, or just to put more money in it, to dollar average the price and hope that this stock will go up. But I do not believe so, because during crazy times gold actually going up. So this is probably the worst investment in my life, like legit. But whatever, I keep it. I already lost 89%. Even if I'm gonna lose that $255, it's not gonna make any difference. So like I said, overall my return is not that bad because I'm trading options, and options being pretty good to me. I made a lot of money. I did do a lot of trades during this corona time. All this SPXS and JDST situation, this is where I lost my mind and I thought that I can make a lot of money during corona, but I did choose the wrong time and everything was already over. The Fed started giving money to people, federal government started doing this, doing that, a lot of money in the stock market, they cut the interest rates, so it did go crazy, and I was thinking that I can make a lot of money in a really short term, and it didn't happen. Well, okay, that's the lesson to me, and I think I learned it. So now I'll be much smarter, and if I see a really great opportunity to play on, I will double check, I'll do my research. I always say, do your research, guys. Do not put your money at risk without researching it. So, should you sell your stocks? Well, I think you shouldn't, or it depends on your strategy. If we're talking about short-term investments, if you made a good amount of money, you can sell them. If we're talking about long-term, I would keep them. Like, as you can see, that Apple stock, I bought it a while ago and I'm up 61%. PayPal, I'm up almost 100%. So I don't want to sell them, and these companies are big. We know they don't go anywhere. They will be here. Even that, I think that 2020 will be crazy and market probably will go down a lot. I do really think that maybe real estate market will go down too, but I will make another video about real estate market in 2020. And don't sell good stocks, blue chip stocks like AT&T, Coca-Cola, and others. Don't sell them because they're pretty good, and even if market will go down on the long term, it's not a big deal, it will go up. So Apple right now, sure, you can sell it because almost at 52 weeks high, and I made a pretty good amount of money on it, but I'm keeping it. Maybe I'll sell it later, but I don't think so. If you lost money during this in your stocks, the price went down 20, 30, 40, 50, 60%, don't sell them. Well, it all depends. If like the stock like JDST, I lost, it did reverse splits and other stupid stuff, so I lost 80%, but I'm not going to sell them because that 20%, it doesn't matter anymore. It's like I will hope that it might go up and it'll make at least some money, then just sell it and take that 80%. Technically, if you didn't sell it, you didn't lose. Doesn't make sense. It's kind of too optimistic to be true, but that's how I feel. Alright guys, thank you for watching me. Hit that like button, bell, subscribe, and watch my videos, and I hope that we'll see you soon. Take care.